Today is the last day of quarter one in 2023. This year has flown by. What's flown by even faster is how long we have gone up for in this new stage, potentially, of a bull market, and just how long ago the FTX collapse was. Next week will mark 5 months since the FTX collapse. So that begs the question, is this bull run over, or are we just resetting? You guys may know what my thoughts are here, but I want to dive into the analysis on the charts today, looking at the fear and greed index to give us a rough idea of what we may expect in quarter two of 2023. If you haven't already, smash up that like. It really does help out a lot. And if you're one of the 9 out of 10 people who doesn't hit the like button, tell me why not. Let me know in the comments section down below, or simply just click that like button. All right, guys, the last thing here is for a limited time, SwiftX, Aussie guys, they got $20 of free Bitcoin. So they're doubling the deposit bonus from 10 to 20 for the month of April. And as always, you'll find a link to our free Discord where you can see the results of our trading strategies over there, all within these free sections of the public community here and the news and results. Guys are doing really, really well over there. All right, so first things first, a quick scan of the traditional markets, which I'll go through in more detail in tomorrow's video, so make sure you are subscribed. These are climbing higher regardless of the impending doom of recession and banking collapses and anything else you want to throw that way. You know, there's a massive list of how bearish everything is going on out there, but all you got to do is look at a chart. Yesterday, we closed higher again on the S&P 500. We closed higher again on the NASDAQ. We've been closing higher and higher, putting in higher lows after higher lows, bouncing off significant downtrends. This is the bear market downtrend for the NASDAQ. Dead on cue with the banking collapses. That was dead on cue with the 50% level. And now we are higher than the previous highs. So let's see how this ends the week. Make sure you subscribe and I'll go through in more detail for the traditional markets. But of course, this is all helpful for our Bitcoin chart as well. What we're going to look at when it comes to the fear and greed index, what's been going on with that over the last couple of years, and of course, the most recent period. And we obviously need to see the traditional markets also beginning their bull market for crypto and Bitcoin to also go up. There is no decoupling that Bitcoin is going to skyrocket, but the stock markets will collapse because of insert quote, banking collapse, banking crisis. My view is that is not going to happen. And my view is because of what I'm reading in the charts. Those markets are going up. Bitcoin is going up. Real estate prices are stable and are also starting to increase. Let's stick to what's going on here in our favorite market, which is Bitcoin. Now, this is one of the charts that I've been looking at and using here for Bitcoin entries over the last 9 or so months since that low came in here in June of $17,500. Remember the calls here, Bitcoin will go to 10 grand. We're still hearing it, but it's getting fainter and fainter. Same thing happened in my previous bear market back in 2018, 2019. Bitcoin will go to $1,000 and it never got there. The previous cycle to that, it got as low as $160 with it maintaining a stable price of around 200 to 250 throughout that accumulation. But of course, the calls were for Bitcoin to go to $100, mostly because it's a psychological level. Now, I'm going to come back to this chart here and what I think is going to happen in terms of buy entries and where Bitcoin may come back to. But the big thing we're here for is an update for the fear and greed index. What is going on? How can we use this moving forward when it comes to Bitcoin and crypto? What is the sentiment out there? And is this bull run over? Or are we just resetting on the chart? And it's important to note what the market sentiment is doing, because that allows us to reset in terms of price. Allows us to identify, is the run over and we're resetting, or is it basically over and the cycle is continuing in the direction that it has been? So today we just saw the fear and greed index close at 63, which means it's greed. Yesterday, it was at 60, which was greed. Last week, it was at 61, which is greed. So we're hitting greed quite consistently at the moment, which is obviously a little bit premature for all-time highs just to start going greed into extreme greed and hitting all-time highs, seeing as we just came out of the cycle low, which is what I'm calling the cycle low based on the data that you've seen here on the channel. So we've hit 15,500 as a low, 17.5 was the other low in June. So a nice solid area of support that was forming in those mid-teens. And now we find ourselves in greed after being in extreme fear for so long. Last month we were at neutral, and this is the chart that we need to focus on here because we have the majority of the data on our chart for this area from 2020, April 2020, but we don't have the data on our chart for this area. And precisely what I'm talking about is this chart right here. So we've got a crypto fear and greed index indicators. This is specific to TIA and it will be released shortly. So make sure you are on our email list. Like I mentioned before, top of the video description, free crypto and economic report. If you subscribe to that, any of our updates with our free indicators, you'll get access to when they come out. We can email you those once they're available. So this is an easy way to look at the fear and greed index. This is a chart of Bitcoin, and what I've done is go through and label each of the areas that we were looking at purchasing Bitcoin based only on the fear and greed index if it hit 15 or under. So this is something that I looked at and came up with through the first bear market of 2021, basically when we fell from 60K down to about 28, 29K. The reason for that is that people were extremely fearful and not wanting to purchase BTC. Because the market had collapsed and everyone was in extreme fear, it's usually a good time to be buying Bitcoin. Of course, it depends on where your outlook is. If you're only looking to hold for a few days, probably not a great tool. A few weeks, probably also not a great tool. But if you're looking to hold for several months, potentially years, it's a fantastic tool because it allows you to buy at those lower points rather than buying at the high points. And it really is just a simple one filter here where it's if it hits 15 or under, buy. Now, there are many strategies to layer on top of this so that you don't buy on the way down at 40 or 36K, because at the time you just don't know whether this is going to be the low or not. You have inklings based on other TA that this might not be the low and the market's going to go further. So there are a couple of things that we can add to this to improve the efficiency, maybe not buy at certain times and maybe buy more at other times, which I'll go through in just a sec. And what do you know, the alerts come up, the French market is hitting new highs again. Good stuff. Anyway, back to Bitcoin over here. So having a look at the history here for the Bitcoin Fear and Greed Index, every time the market hit 15 and under, which is extreme fear, obviously we can't see this on the chart here, but we can see it on the historic data here. You're looking for the 15 and under, and we can look at this all the way up to around this point here in 2020. You can see there's quite a few times where we were at 15 or under. That's the bear market there before the market collapsed in this period into the lower area of 3.5 to 4-ish thousand. And then we have more lows here when the market started to run up and reach its peak of 14K. It dumped to around 9K. So these buys are around that 9 or 10K. So this is not telling you that the price is always the lowest. It's just telling you when the most fear is in the market. And so that's related on this chart here. So just taking an average at this point, there's going to be multiple times. Maybe you're going to buy more often at this period of February, March, April, July, June, and then August, September, October throughout the year of 2018. So there might be more purchases here than here, but in terms of an average for ease of numbers here, we'll take some sort of middle point here saying maybe you bought a lot of BTC and the average price ended up being $5,000. Moving forward, you got area here of about $9,500 to $10,500. There weren't too many buys here, as you can see from this particular chart. You've got multiple times, but not as many as there were through this period here. And remember, it has to be 15 or under. So back to this chart here, you don't have as many at 10K, which means you're not going to all of a sudden bump up your average from the mid-range here of 5,000 to the mid-range, which would then be 7.5, the middle point between 5 and 10. It's probably going to be somewhere around 6 or 6.5. There's more purchases here because the Fear and Greed Index hit under 15 or under again. So maybe you keep that average at about 6.5 or so because we're jumping up to 7. But then we get the pandemic crash, and that hit a low of 3,800 to a peak here of around 7.5, closing in on $8,000. So I've used an average here because there were multiple buy opportunities in late March and first half of April, closer to the $7,000 end than they were to the $4,000 or $5,000 end. So a nice average here of about 6. So overall, you might be looking at some sort of average price of about $7,000, maybe $8,000 here if you want to just play it safe. So moving forward from that point, we've got a run of about $8,000 there. Remember, we're trying to get to a point here, is the run over or are we resetting? But we want to focus on how we use this crypto fear and greed index and then look at how the run potentially is over, or are we resetting based on what we've seen in the history of the chart as well. So going forward, 2021, you've got some more buying here. Then the market started to collapse in the bear market. You've got only a handful of times for purchasing BTC at around the $41,000 to $43,000 level. So remember, this is between the 15 or under on the fear and greed index. So we just have a look up here. You can see the reading is right there. There's 15. Move forward a day. There's 18, so you don't buy on the 7th. And the next day is 10, so you buy again on the open. The next day is 23 on the reading, so you don't buy. So there's only 2 purchases here at the open of 43.5, and then again at 41.5. So call it around 42,500. Same sort of deal here, only a couple of opportunities before the market jumped out of the fear zone. So that leads us to the current and only times that we've purchased BTC using this particular plan based on Crypto Fear and Greed Index. That's throughout May and June. The average here is about 25,000 because you've got quite a few purchases here. Not every day was a purchase, like you can see here. There was a reading of 17, so it's a don't buy, but an average here around that 28, 29, $30,000. So 28 to 30, call it around 29. Then you got the lows here. These are $17,000 to some highs here. This area was roughly $22,000 to these peaks. So 17 to 22, somewhere in the middle there. We're looking at 19.5, 20. So average that 20 to the 29. It's about 24.5. Call it 25. So you got about $25,000, $26,000 average price. Move forward to today. The current price is $28,000. So although this plan with one rule alone, which is a very simple mechanical plan, didn't get you into the market at the lows, not everything is perfect, but remember we've got other strategies looking that we'll look at in a sec. It didn't get you into those lows. You're now above, or the price of Bitcoin is now above the average price of that area, which would have seemed pretty difficult to buy it at the time. And then a few months later, when you see the market go to 17 and 15, you think, why the hell did I buy at that point? But remember, this is only one rule. And I hope you're using more than one rule in your purchasing. And you're not just saying, I'm going to buy Bitcoin every other week. This is going to be a much better strategy because you're buying on those fear drops in Bitcoin, rather than every other time when you're buying at 60s, 50s, any higher than that, of course. So that's the history of the Fear and Greed Index up to today. That's a rough look at the pricing that it would have been purchased at, probably an average of about 8,000, 7,000 to 8,000 in the earlier days. Then through the bear markets of the bull market, so the pullbacks in the bull market, probably looking at an average there of mid 30s to high 30s. And then when you're definitely in this bear market, probably an average price of about 25 to 26,000. However, you're not buying the same amount throughout those periods, and this is what a lot of people get wrong. You might have only purchased twice here at 42, but you're purchasing a couple of dozen times at 6,000 or 7,000. Same sort of deal here at 29 down to $17,000. You're purchasing a couple of dozen times, which brings that average price right down. Now, the other rule is you can use a pyramid strategy. That's what we have here. And we've spoken about that quite often, Michael and myself. Pyramid strategy just means you don't buy as much at the top as you do at the lows. So you have to come up with where you think those lows are, where those tops are. So if you are looking at the market through here and you divide your pyramid up through these levels, call this 10,000, call this 25, call that 35, 45, etc. You might only buy one lot here, but in this zone, you'll end up buying 2 lots. So that would then bring your average down even further. This is the sort of stuff that gets people wrecked if they don't know how to pyramid properly and they're buying the same sort of amounts or even more at the higher prices. That's what El Salvador did. That's why they're still completely underwater. buying billions of dollars of Bitcoin at the highs and buying only millions of dollars of Bitcoin at the lows. They've got tweets about that, buying $1 million of Bitcoin a day, whereas at the peaks, they're buying $1 billion worth. Absolute morons. That's what you don't want to do. It's really simple money management for your trading plans. And for whatever reason, people who run countries have all idea about that sort of thing. Back to the charts. Now we have an idea of the fear and greed throughout the market itself, where these purchases were using the fear and greed plan. We have a couple of rules here looking at a pyramid strategy. If you want to know further about that, of course, subscribe to the channel and check out Michael's channel. We go through that. That's part of investing. And then also filters of when not to buy. Maybe you don't want to buy when the market has only pulled back 30 or 40% from the highs, knowing that Bitcoin can go 80% from those highs. That's another filter that you could potentially use. You can make up any sorts of filters, just like we've done with our purchasing plan here. So I was looking at buying Bitcoin under the 25 down to the 125 level. So basically, once Bitcoin has retraced 75%, great time to buy. That has historically been the best times to be getting into Bitcoin between these zones, which is essentially a pullback from the high of 87% all the way to 75% from the high. So been pretty good accumulation zones for BTC along the way. Eventually, this won't work and Bitcoin won't pull back 75%. Maybe one day it only pulls back 73% and then you don't get an entry, which is why we use other TA like Gann and Wyckoff analysis to get into these markets. So is the bull run over or are we just resetting? Looking back at history, it looks like we're going through a similar sort of period to what we had throughout 2019 when the market decided to break out of the accumulation zone. You can see we had an accumulation zone here, which in terms of the crypto fear and greed index didn't reach the level of 15 or under. However, it was still in extreme fear. Like you can see the reading for extreme fear is 0 to 25. And that's laid out on this chart here. So this indicator basically just replicates the data from this chart. So the extreme fear lasted for quite some time. There were some areas that it did bounce out of briefly in August of 2022. But you can see that that was potentially what we believe now to be is the accumulation area for BTC. So if we had that same sort of thing back in 2018, 2019 as the accumulation zone and the market just starts to break out, we could be on for a little longer in the run before the reset. And like we saw previously, the resets can take quite some time. The bears come back, the noise gets louder, the bears think they've won the day again, and it can drag on for a very, very long time. Unfortunately, that's where you start to get the bulls getting washed out, thinking, oh, we were wrong, it's over, the market is going to fall down from this point, we're going to come back and test this zone, the market is going to come back and go back to $1,000 because of how long that drags on. You get a few little pumps here and there, but from June 2019 to the lows at the end of the year in December, you've got to wait a solid 6 months of continued decline after decline after decline. So it's not an easy run up to that next all-time high. The only time that gets easy is when everyone is in and everyone believes that the bull run is back on, just like what happened in late 2020 into early or mid 2021. Everyone was on the same path. It just kept going up and up and up really, really fast for around 6-7 months before we had that first collapse, and then it weakened out. And of course, the rest is history from that point. So at this stage, looking back at what we've seen in the past, especially after a significant accumulation, like we can tell from the fear and greed index, we've gone through a significant amount of fear. It does take a fair bit of movement to start to swing us back to the downside after such a long accumulation area within that extreme fear. This chart also helps have a look at maybe where we could expect the bull run to end before we reset. So as an answer to the question, I think the bull run, this start of the bull run, which will be broken up into multiple bull runs within the macro bull run, get your head around that, this start might have a little further to go based on what we saw in the past. Remember, we're looking at April, May, June of 2019. You can see just how far the greed can creep into this first phase after an accumulation. And it's looking at a rejection somewhere around 70, maybe if we get that extra peak somewhere around the 80s or early 90s. But if we play it safe and just look for the emotion, the market sentiment to reach 70, mid 70s, it would mean that we don't have that much further to go in this particular run. So once we get to that point in the sentiment, then we take a look at price and then we reassess to see how far down the market could fall. We weigh it back in with the sentiment. The sentiment will probably have to reset back to between sort of 10 and 50, probably more likely 40. So we're going to look back towards this area here, that 10 to 40, and wherever the price sets up there, that'll be the next stage that the market starts to move from. Note that we're not out of the bear market yet, and you can get a move like this that comes out of those lows and only puts in a little run, also like this right here. So we really do have to be quite cautious with any of the moves out of those lows. There could be false attempts and a quick break under. That's going to be the next tricky part until we really start to put in a clear move above wherever the top comes in next. This is the easy part. The next parts are going to be quite challenging. We just don't know where those next moves will come. Overall, it's still a macro bull, providing the lows remain intact. So far, that low area is between 16 and 18, and then this significant drop here into 19,500, which was the banking collapses. So it's a macro bull, providing the macro lows continue to remain intact, regardless of where we move up to and get rejected from, and however long it takes to fade out from that point. So we have potentially a little further to run in this first leg of the bull market, based on what I can see here, looking at the market sentiment. Not that much further to go, as you can see. Maybe we top out here at 68. Maybe we have one last dig and push the price to 33K, 32K, and then we get that final greed reading at this top before you can see we have some quick whips to the downside. Because remember, the bears are still out there. There's a lot of people still thinking we go to 12K, and this, I think, is going to allow us to reset that fear. And if we do get a reset of the market sentiment at a higher price, potentially $25,000, $24,000, $28,000, depending on where we top out, then that's going to be another good setup over the coming 12, 18 months. So that's a pretty detailed look at the crypto fear and greed index, looking over the history of it, where the index has shown when to buy based on that one simple rule, looking at filters that we've put across this tool as well. And then also a separate strategy, which I've used many times before and shown on the channel a lot as well. So make sure you are subscribed, like the content as well. If you're one of the 9 out of 10 people that don't like, let me know in the comments down below why you don't like clicking the button. And thankfully, I didn't go into the details of the S&P and NASDAQ because we'll save that for tomorrow's video, as this one is long enough, looking at how this market continues to go up in the face of the fear, the recession, the everything else going on out there, inflation and interest rates. The market continues to go up. So this is going to be an important one. Where does it close tomorrow? Stay tuned. I'll see you guys at the next video. Have a fantastic end to your week and start to your weekend. Until the next one, peace out.